Hey traders, welcome to Charts and Coffee. Great to see everyone here. Happy Tuesday, everybody. Happy Tuesday to our trading room, as well as YouTube, Facebook, Twitter. Fantastic. Good to see you all. All right. So let's get started. We do have a if you haven't looked at the economic calendar this week yet, we talked about this at length in the This Week in the Markets newsletter. And if you haven't checked it out yet, I believe from today forward, it probably started yesterday, we are going to have pretty much nonstop. Let me show you here. We're going to have pretty much nonstop FOMC speak. Now, I'm going to take you on over to Trading Economics because they actually had a more thorough more thorough coverage of all the speaking events, a little bit more so than Forex Factory. So let's jump on over here to Trading Economics. And you'll notice today we had the Meester speech at 8:15. We also had retail sales. And then moving forward, we've got Bostic at 8:55, which was 6 minutes ago. The big one today, though, is going to be the 10 a.m. bar testimony. So unlike all the other FOMC hot zones that we have this week, other than Powell, Barr has 2 days of testimony. And what that means is, unlike just a speech to, some random luncheon or a gig on CNBC, I believe was just what we had yesterday with, I think, Bostic. Anyway, this is going to be actual testimony. He's going to be on the Hill testifying. And that could have more impact in terms of potential movement and expectation for what the Fed Fund futures could do. So keep that in mind, gang, as we move through the week. I mean, this is Tuesday alone, right? As we go into the second half of the day, Williams, Logan, Bostic at 7. There is not a Fed member who someone is not shoving a microphone in front of this week. It's going to make for a very tricky week because every time these FOMC chuckleheads open their mouths, it's going to land here. This is the FedWatch tool from the CME. This is how we understand what's being discounted, what is expected come the June meeting, the July meeting, the September meeting, the November meeting. And the thing that we're looking at most specifically is, do we indeed have a pause? That's what's discounted, gang. We are now, as of May, at that 5 to 5.25% target rate probability. Do we hold there through June and July? So far, that's the probability. That's the most likely outcome. We take a look at September, and now you can see it's not that far apart, but it's sort of neck and neck in terms of maybe. The higher possibility, by the way, is for a 1/4 point cut. It's not until November that Fed Fund futures, traders and investors are saying, you know what, you've got to pivot by now. This has got to be the month. If you didn't tease it in September, if you weren't discussing it then, if you didn't give us that 1/4 point rate cut in September, you better darn well do it in November. That is what we're expecting. Believe me, the Federal Reserve absolutely knows this is what's out there. All right, that being said, this is what I'll be looking at most this week in terms of expectations for what every one of those Fed events, Powell, of course, as well, could do to the broader averages by way, and by the way, and currencies and treasuries by way of expectations for the pause to cut, which is just the pivot transition. All right, so with that being said, let's jump on over to the charts. And as always, if you have any questions, type them on in and we will get to work. All right, so first up, hey there, Ann. Thank you for the SPY video. The SPY. Oh, Friday's video. On Friday, I did a video called Monday's Picks, which was my sort of glimpse into the homework that I do, the focus that I'll have come the new week, and then I'll even a little bit of what gets worked into this week in the markets. So thank you. And I'm still, look, if we take a look at the S&P, which is the lens through which I'll look at the SPY and the SPX, you'll notice, oh my gosh, if you're out there wondering why is it so tough right now, Gang, it's not as if we don't have some overall directional bias. It's mostly bullish, especially the S&P being above the 200 propulsion. What the problem is, we have not made a significant move outside of a range since May 8. 8 trading days. Since May 8 have we not, or I should say 1, 2, 3, 4, 5, 6, 7. Okay. 7 trading days. We have not left the range. And today does not seem to be one that's going to break that mold yet. It's not about whether or not we simply get triggers. It's about whether or not we can get follow through. The easiest way, so a lot of folks ask me, Rog, how do I know whether to be a swing trader or a day trader? And what I'll say is there's something in the middle, and that's a short-term swing where we would have overnight exposure to whatever contract, futures, ETF, stocks, options that we would choose to have. But our time window, our time horizon is 1 to 3 days, not 2 to 10, not weeks, not months, days, short amount of days, 1 to 3 days. If not, day trade. And if you're going to ask yourself, well, Ron, how would I know that? Look at the daily chart. It's really simple. Look at the daily chart. What are the current ranges in place? And where are we within that current range? Because if we're stuck in the range, as we so obviously are here on the S&P and a number of other indices, then it's very difficult to get followed through. And it's easier to shorten the time frame and shorten the time horizon and get that follow through. So I hope that makes sense. Thanks, Ann. I appreciate the comment. All right, so let's get on over to some more questions here. Kicking it off with, let's see, KR asks, does respect the trend that was, that's a saying that I have, gang, respect the trend that was. Does respect the trend that was, is it applied to all time frames? Yes, yes. I will have, if a market goes neutral, I will look to see what the trend was that it transitioned out of, and I will have I will prefer to be trading in the direction of the trend that preceded. So if we have chop, well, let's take the S&P, for example. We have chop right now. We're above the 200, but more importantly, the trend that was up. If the trend that was up, this is a bullish neutral, right? Or neutral bullish market. All right, next up, hey there, Megawatt. Great call in NVDA yesterday. How is Costco on the 4-hour for a swing trade? Sure. So if I'm going to go to Costco on a 4-hour, let's do this. I'm going to go ahead and take my 1-hour chart. Now, 4-hour time frame, I will tell you, my friend, is not one that I typically look at, but why not pull it up? Same tools, by the way. If I'm looking at a 5-minute time frame, if I'm looking at a daily time frame, a weekly time frame, all of which, by the way, today we will be looking at in the Sector Secrets Mastery. We have our day trading session this morning. We're going to move on to our short-term swing trading setups. And then today at 3, we have our macro weekly big picture setup conversation coming up. All right, so Costco. If I take a look at Costco, the current structure of the 4-hour is in chop, and it's coming up off of an overbought slow stochastic reading. Does that mean I'm bearish? No, it just means that there's a ceiling that will probably see price respect. If we can get down to 495, that would be a test of the 200. May not be too bad. If not, near-term support waits at, say, 499 to about 497 and a half. That would be a decent layer of support. If the slow stochastic can bounce off this midline, so there's a 80 level, there's a 20 level, and there's a 50 level. And if we can bounce off that 50 level, that could be some decent indicator confirmation that Darvis 2.0, which is just support and resistance, gang, those automated support and resistance levels in the yellow lines are likely to hold. So that's what I would look at for a swing. And 4 hours, a pretty darn good swing trading time frame. I agree with you, Megawatt, because it's very likely that we're going to end up taking this trade overnight. That's what I consider a swing. The moment I take something overnight, that's going to be possibly a swing. All right. Happy Tuesday. Hey there, gang. Yes, absolutely. Happy Tuesday. All right. Back to our training room. And JR asks about UNG for a swing short. All right. So before I get to the ETF alternative, of a liquid futures contract, I'm going to start with NG. And as far as a swing short goes, I don't have that set up quite yet. In fact, I'm not even allowed to short the 1 hour. Take a look at the 1 hour. I've got a green structure. Green structure means buy only. Look at the 5 minute. 5 minute shows me buy only. I need to climb a little bit higher, possibly to the 2.52 level, maybe 553, 2.53 JR on the NG. Once I have that, I'm at that automated support and resistance level, that yellow line, aka the Darvis 2.0. Then maybe we're also overbought on the slow stochastic, up near that 80, up near that high. And then once UNG is at that level, I can think about the UNG ETF. So once NG futures are at that level, I can start thinking about puts on UNG and look for that overnight exposure. And just really all I'd be doing at that point is looking for UNG in a neutral environment to be overbought and just sink back down into the range. And it's been pretty happy sitting in for some time, right? That's the way that I would look at that. All right. Sachin, hey, how are you? Awesome. This week in the market report, my pleasure. Please talk about the relationship of the ISM and XLI a little bit more. So ISM has a historical, if you look back at, say, 10 years of the ISM, which you could easily do at Trading Economics, at Forex Factory, even at the Fred data from the St. Louis Fed, there's a number of places you can get that historical data. If you go back 10, 20 years, what you'll notice is where those historical average lows are. We're very near those. If you look at the way that coincides, remember, ISM manufacturing is going to map mostly to stocks in XLI, not stocks in the NASDAQ, not necessarily stocks in the S&P necessarily, because these are manufacturing. This is manufacturing data. The industrials have far more of those types of names weighted within it. So that's really the relationship. You think about what manufacturing data means to XLI. You look at the correlation between historical lows on the ISM and the XLI, and they tend to jive, right? So that was just something I was mentioning that would prime us for beginning to look for a setup. Because remember, that correlation is not the setup. Correlations, seasonalities, tendencies, those are never setups, right? But if they point us in the right direction, and now we know to look for some sort of price stabilization, some sort of support, some sort of oversold level, maybe support at the 200 propulsion, corresponding with that, confirming that we could be at support. Now we're in business. We take an item like that ISM XLI connection, and then we look for price to say, yep, this could be in play. And that's why I use any kind of seasonal or tendency or time of year or data to enter a market. There's got to be that underlying price reason, whether that's a price pattern, indicator, hopefully a little bit of all of that, right? To create a full sequence of, is there support? What's confirming the support? And then do I have a manageable entry, a risk manageable entry? So thanks for the question. All right. Hey there, Stacy. Remember to hit that like button before you leave. I appreciate that. I do. All right. Let's see. Question here on Zed from Off-Road Bear. And let's see here. It's north of the 200. Off-Road Bear, if we can trade down to $42.50, test that 200 one more time, that'd be a beautiful thing. I would definitely keep an eye on that. Yeah. All right. Next up is Nike. The consumer discretionary corner of the market has been pretty interesting, because what we have now is a little bit of sigh of relief in Tesla. Elon has found someone to helm Twitter. And then the hope is that, and by the way, why does all this matter to Nike? Why does Amazon, why does Tesla matter to Mike? Why does Tesla's little relief rally perhaps, Amazon breaking above the 200? Why does that matter? Why did I dedicate an entire video to Meta and Amazon last Tuesday talking about those potential moves? Because if the overall tide in the XLI is up, other stocks in the XLI, let me show you what I mean. Other stocks in the XLI could also then move higher as well, right? So here's your XLY. Amazon, Tesla, Home Depot, those make up your 3 heaviest weighted stocks. But go down the list. Nike, McDonald's, Starbucks, Booking, TJ Maxx, or O'Reilly, AutoZone, they're all in there. Now, Nike is not in an uptrend. However, 200 propulsion tests with a price pattern to confirm that we're going to indeed respect that level is actually one of my favorite setups. And while a pullback on McDonald's or O'Reilly or AutoZone or even Amazon at this point would be a buy the dip, because all 4 of those now are bullish, and in this case, relative outperformers to the XLY. Nike is definitely an interesting stock, testing that 200. So what I would be looking for on Nike at that 200, just as you said, we've got 6 weeks to earnings, right? So we're not in a crunch in terms of time. So, one thing we could do, let's do this. One thing we could do is bring up TradingView. Let's do that. Let's bring up the TradingView charts here and pull Nike up and take a look at some of the volume profile. So I use the visible range volume profile on TradingView, and let's pull up Nike. It looks like we will be just a smidge below that. Realize that we do have some Darvis support at basically 116.85. I don't mind to see a pierce of the 200. Notice the last time we were in this area, in a neutral environment, we actually dipped below the 200. So I'm not going to be surprised at all if we get a little bit of a dip below the 200. The 2023 point of control is way up at 126.5. So I don't have a lot of help there. This is actually going to work out pretty interestingly. Getting above 120.5 will be key. Not just getting above the Monday high at 120, getting above 120.5 is going to be key. So that's the way I would look at that in terms of the movement. Yeah, that's the way I would say. That's the best way for me. That's going to be the best way. Now, this is our dividend, right? Dividends, ex-dividend date. Typically, we will see rallies into ex-dividend date, usually a little bit immediate in front of ex-dividend date, but then a little bit of weakness. So keep the calendar in mind, but I do like that setup. An ex-dividend gives a little bit more bullish wind to our backs in this particular setup. Appreciate that, Off-Road Bear. Yeah, if y'all have questions, comments, requests, whatever it is, let me know. Type them on in. I do check the feedback, the comments very often, very frequently. All right. MRK. Hey there, RD. Any long interest in MRK? Heck yeah, absolutely. We have an uptrend. Let's jump on back to our toss charts. We have an uptrend in MRK. That means buy the dip is valid. A couple ways we can buy the dip: a 21 propulsion, which is my replacement with a moving average cross of the 21 exponential moving average. On the daily time frame, I don't have a problem with a dip into the wave. Something a la, look, we could have a combination. Now, this is in front of earnings, so not necessarily what I want to see. But notice that in front of earnings, we dipped into the 21, dipped into the wave, and then we moved higher. What I do love about this pullback, and it's a key feature of my favorite way to buy the dip, you might want to write this down. Did we put in a new high before the retracement? I love that, because sometimes we could retrace to some sort of mean reversion. For me, look, gang, there's no only one mean reversion. There's no such thing. First of all, it's a mean reversion of what, right? Which is just a Z-score on whatever the indicator is. And then the second part is, what is the mean that we are using? I like the 34 EMA. So if we pull back into the wave, that's a mean reversion. A mean reversion for me is valid in an uptrend. So in this case, we put in a new high, as you can see here, on the 3rd, and now we're pulling back into a possible mean reversion. That's the way I like to do it. Not having that higher high can be tricky, because it's the higher high that grabs the attention of the broadest group of retail traders who like to be in markets that are putting in those higher highs, being discussed on a regular basis. And those are the ones that look the most bullish to the broadest group of retail traders. And that's the game right there, gang. All right. As always, thank you for all the questions. Thank you for being here for Charts and Coffee. That 20 minutes sure does go by quick. As always, Trying to get through these questions first come, first serve. My futures folks, I'll see you all in the futures room in just a moment. My sector secrets mastery folks, ditto. Everyone else, thank you as always for being here. Keep an eye on that calendar, please. Chuckleheads sprinkled all throughout this week. I'll see you tomorrow, same time, same station. All right, gang. Until then.